Hello, and welcome to another tax resolution training video.
Now let's talk about IRM section 5.1.1.7, talking about case coordination. And this is one of the places where I quoted directly from the IRM, just because it gave me a little bit of a giggle. It says, effective coordination with open communication will help reduce taxpayer burden, provide excellent taxpayer service, and facilitate the appropriate resolution of the collection case and the case in the other business unit. So there is a few chuckles in there, depending on how much experience you have actually interfacing with the collections division, within SBSE. The goal of case coordination is to provide the perception of quote unquote one IRS. And again, that gives me a little bit of a chuckle, because if you've worked any more than a few collections cases, there is a very apparent disjointedness across most IRS business units, which is unfortunate, because it does not. What's one of the IRS's missions is to instill confidence in the system or something like that. And the way that they actually handle things often does not instill that confidence in taxpayers, let alone practitioners. Like, for example, Stephen just mentioned here a few minutes ago that the practitioner priority service is open. And that is true. As of yesterday or today, the practitioner priority hotline has been reopened with a skeleton crew. But word has already gotten out, and I'm sure that the system is overloaded already. Okay. Revenue officers and revenue agents are the two business unit people that will work together the most. Okay. They are supposed to respond promptly back and forth and share everything. The reason I've underlined that, the share everything, is to point out that anything that your client says to a revenue agent will get back to the revenue officer and vice versa. Okay. So there is no containerization of information, is what I'm getting at. So you want to make sure, first of all, that your client isn't saying anything. First of all, they shouldn't be talking to either ROs or RAs. That should all run through you. Okay. But you want to make sure that you have all your ducks in a row, so that you can efficiently move the case forward. So, for example, right now, as we're recording this, we are still in the midst of the government shutdown. And so it has been very frustrating for tax professionals trying to resolve cases, trying to get levies released, trying to get people set up on payment plans, trying to get liens subordinated or withdrawn, right? None of those processes are happening. And so it can be very frustrating. Well, you as a practitioner should be using this time to get all the ducks in a row. Okay. In a lot of cases, it's a curse, but in a lot of other cases, it's a gift, right? It's buying you time to get things figured out, get your taxpayer fixed. Bear in mind that examination cases must be resolved before collection cases. It is not uncommon for a taxpayer to have several tax periods, multiple years, multiple quarters, open in examination. And those examination investigations need to be closed out first in order to have a final balance due figure that collections can work with to resolve the collection side of the case. So most times, even though we're talking about case coordination, they do not happen concurrently most of the time. there is a lag while excuse me, while waiting on examination to figure out what they need to figure out. ROs should always look in computer systems for the presence of a transaction code 420 or 424. TC 420 and 424, these are audit freeze indicators. And this is something that you may want to ask the revenue officer about directly when you're having a conversation. Okay. You should also see it on transcripts. One of the most important coordination aspects is between SBSE, Small Business Self-Employed Division, and appeals. Because there are often cases, tens of thousands of cases a year actually, where there is part of the case that appeals has jurisdiction over, and part of a taxpayer's case that collections will still have jurisdiction over. The most common situation where this occurs is in a collection due process appeal. Remember that CDP cases come with a stay of enforcement. And a collection due process appeal only covers the one tax type and tax period that you had the CDP appeals rights for. It does not apply to the other tax periods. And one of the benefits of a CDP appeal is the stay of execution, the stay of enforcement. Okay? But appeals only has jurisdiction over the tax period related to the CDP. Your client's other tax periods are still open in collections and could potentially still be at threat of levies and other enforcement action on the collection side. However, don't forget that 3/4 of all cases end up on a payment plan. And it is the responsibility of appeals to consider the resolution alternative, meaning the installment agreement, for the CDP case. That means that because appeals is the unit that's actually considering the installment agreement, they are the ones that put the tax period into installment agreement pending status. Therefore, collections needs to coordinate with appeals in order to make sure that the other tax periods that are not under jurisdiction of appeals are also placed into pending status. Because when you request an installment agreement, it's for the entire balance due that the taxpayer owes. Okay, I hope that made sense. So what you need to see is a TC 971, okay, specifically TC 971 AC 043. That is the transaction code for a pending installment agreement that is being considered by appeals. Check thine IRO, trust but verify, okay? Make sure that the TC 971 has been entered for all the balance due periods, not just the periods that appeals has jurisdiction over. You may have to go into the transcript delivery system, TDS, pull new transcripts for all tax periods and verify that that TC 971 is there, okay? This is probably the most important thing of this entire hour, because when you cross-check this, a lot of times it won't be there, okay? Not the majority, but quite frequently it will have failed to have been done. And you need the revenue officer to go in and enter the TC 971 AC 043 code on all the other tax periods not governed by the CDP, because the installment agreement pending status protection from levy action applies to the entire balance due. Okay, this is a very, very important piece of protection for your client. In our last few minutes here, go real quickly through a couple other sections. IRM 5.1.1.9, customer service. Again, there might be a few potential giggles here. The service is dedicated to providing quality service to all taxpayers and their representatives. Providing quality service to taxpayers requires the following. Advise, explain, and protect taxpayers' rights in each matter where applicable. Be sensitive to those situations where the taxpayer should be referred to the Taxpayer Advocate Service. See IRM section 13.1.7, Taxpayer Advocate Service Case Criteria, which I'm sure we'll cover in a future episode. 2, try to assist taxpayers even if they have questions or concerns beyond your area of expertise by researching the appropriate publication or website. Seek advice from coworkers or GM if a taxpayer has questions or concerns beyond your area of expertise or beyond a responsibility. Bottom line here for IRM 5.1.1.9. What this says is that it is a revenue officer's job. It is a ACS collection call center person's job to go beyond what they themselves are trained on in order to help the taxpayer. Okay? It's their job. It says so right here in IRM 5.1.1.9. Okay? So if somebody at the IRS ever tells you, that's not my job, that's not my problem, guess what? It is. Okay? Because of this IRM section. Okay? So see again why it's good to know some of these kind of seemingly silly or esoteric sections of the IRM. A couple other quick things before we wrap up here. 5.1.1.10, IDRS access. This is a bunch of stuff about how to use your computer is what this section of the IRM is. It's instructions to revenue officers about how to use the computer system. But the big thing I want to point out here is 5.1.10.1.3, prohibited IDRS actions. It is a violation of federal law. It is a violation of the Taxpayer Browsing Protection Act to look up records of themselves, their spouse, their ex-spouse, ex-boyfriend, ex-girlfriend, their parents, household members, relatives, friends, basically anybody that they could potentially have a conflict of interest with. Okay, this is a crime. Okay, and if you find out that somebody at the IRS has been doing this, then I would have no qualms throwing them under the bus for doing so. IRM section 5.1.1.11 talks about TIN issues. This is all about internal procedures for resolving TIN conflicts. Talks about the procedures they're supposed to follow for cross-referencing with other agencies such as the Social Security Administration, checking the individual master file against the business master file and vice versa to see if like a Social Security number has been swapped with an EIN accidentally or intentionally. It discusses those items. Okay. It also discusses where things look really funky, where there's potential fraud, for example, and referring those to IRS headquarters for follow-up action. Some of those will result in CI referral. Stephen asked, practitioners qualify under 5.1.1.10. We do not have IDRS access. This is the IRS's internal system only. So this does not apply to us. This is for IRS employees. I actually, what you're probably talking about is looking up your own transcripts and having your own e-services stuff. I actually recommend that all of you file, once the CAF unit opens back up, file a power of attorney on yourself and pull your own transcripts occasionally. I think that's worth doing. Can they have a conflict of interest with us? Oh, yes, absolutely. Absolutely. So let's see, if you're working a case and let's say that you're working a case that's been assigned to an appeals officer, and that appeals officer is part of your weekly golf foursome, that's probably a conflict of interest. And that person needs to recuse themselves from anything to do with any cases for anybody you're ever representing. So absolutely. Real quick, before we close up here, third-party contacts. IRM 5.1.1.12. Most third-party contact matters are discussed in a different IRM section, 25.27.1. The big thing to understand here is that there are 4 specific situations in which the IRS is not required to give you or your client advance notice of a third-party contact. Okay, and by third-party contact, we're meaning contact with an employer, contact with a customer, a business's customer, etc. And so those 4 situations are, number 1, potential for reprisal action is identified, meaning that the revenue officer has some reason to believe that the taxpayer might retaliate against the third party in question, such as causing bodily injury, for example. If the client has authorized, if the taxpayer has authorized the third party contact, sometimes it might be, hey, do I have permission to call your ex-wife? Sure, go ahead and call my ex-wife. For an old married filing joint liability. Because even after divorce, according to the IRS, those liabilities are still joint and several. Jeopardy levies. If the IRS has gone through the jeopardy analysis and they have determined that yes, there is a jeopardy situation, they can bypass the advance notice requirement for third-party contact. And then third, if there is a criminal investigation in process, then obviously the gun and badge department of the IRS, they are going to conduct their investigation without regard to third-party contact requirements on the administrative law side, okay? Because then obviously that's crossed over into the criminal law enforcement side. So that's the rule on third-party contacts. All right, thank you everybody for being here. Really appreciate it. If you want more IRM, and who doesn't want more IRM? This has been episode 1 of what is a new weekly continuing education series that explores the Internal Revenue Manual. And like I said at the beginning, by understanding the IRS's playbook, you become a more effective taxpayer representative. These are slightly advanced classes. You do have to come into these with some of the basic knowledge that comes out of our Tax Resolution Fast Start Bootcamp, the Level 1 and Level 2 curriculum. But this is good tidbits, I think, for some of the more kind of esoteric things related to tax resolution. What I'm going to do is I'm going to post recordings from each episode up on my YouTube channel, and the audio portion will be released in a podcast format that will be available on iTunes, Stitcher, and wherever else you get your podcasts, so that you can listen in as you drive, as you work out, or just to help you fall asleep. To attend the live sessions and earn IRS CE and NASBA CPA CPE credit, I invite you to become a Tax Marketing HQ Gold member if you are not one already. Membership is only $97 a month and includes unlimited live CPE webinars such as this one, an extensive library of tax resolution marketing materials and training, access to our members-only digital community focused entirely on tax resolution, and a subscription to The Profitable Accountant, which is our monthly newsletter showing you what's working now in successful tax and accounting practices. If you're not already a gold member, what are you waiting for? Hop on over to taxmarketinghq.com/gold to start your gold membership today. Once again, thank you all for being here. I hope that you learned a couple of things that can help you be a better taxpayer representative. This has been Enrolled Agent Jason Bowman from Inside the IRM. Thanks for watching and listening. Have a great day.
Thanks for watching. For more tax resolution resources, visit taxmarketinghq.com.